This is the Situation Room. It's Kenya's biggest conversation, and getting into conversations this hour, and we're going investment. And as we do, our audience, KTN, on TV, as well as our radio around the nation, our live streams continue on YouTube, Facebook, and on X. Ndu, Dennis, with you today, and also then joined by two of very good friends of ours. Paul Njoki is the head of affluent banking and wealth management, Kenya and East Africa with Standard Chartered Bank, and Bernard Kombo is the head of SME banking, Kenya. Gentlemen, good morning to you both.
Good morning, Good morning. Good morning, our listeners.
How are you doing?
We are fine. Thank you.
Karibu sana. We're going to be looking into investment solutions for successful family-owned businesses. It's very interesting because even as we do, a lot of people in that space right now asking questions around, what to do, how to do it. But you know what we do? First of all, before we get into the conversation, we're going to tell you which country we've traveled to this week. We do this fantastic thing of going around the African continent every week, as you know. At least Paul knows.
Yes. And
we'll tell you which country we're in, and we'd like to hear your interpretation.
A country that is known as the land of 1,000 hills. A country where has a strict policy against use of plastic, and one that is considered to be the greenest and cleanest country in not only in Africa, but as well as in the continent. Know that country? Rwanda? Yes, spot on. And our proverb today from Rwanda is, the night is counted by the one who stayed awake. The night is counted by the one who stayed awake. I'll start with Bernard. Wageni kwanza.
Thank you for that proverb. How I'll interpret it is like an early bird catches the worm. Mm-hmm. So for those who stays late, chances are they're doing something useful. Mm-hmm. So then they reap the benefits of staying awake.
Well put.
For me, I will say is that you have to be conscious about looking out for opportunity for you to get the opportunities. Yeah. So you have to be awake.
Yeah.
Okay, you have to be awake. And so that's great, hearing that interpretation. And even as we get into, the conversation this hour, last time you were here, you talked about why it was important and why Standard Chartered was insisting and saying now is the time to grow your wealth, and now is actually the time for wealth. And we talked about why it was that. You spoke on the expertise in helping affluent Kenyans to actually start to put this together. Let's go through that. Just an overview of why it's important and why we're saying it's focused to have that conversation around those areas now, Paul.
Yeah, thank you, and good morning. So, so last time we spoke quite at length on affluent Kenyans and how the bank is decided this one time that now is the time for wealth. And just do a quick recap. Standard Chartered Bank has been an organization that have been helping clients across the world, that's Asia, Middle East, Africa, for over 100 years, 170 to be precise. In Kenya is over 100 years. And from the time we set foot in Kenya, in Mombasa, we've been helping clients, build their businesses, bank. But we've also realized that as the country is developing, as the world is developing, it is very important to bring the conversation around wealth into the mainstream conversation. And hence we are saying now is the time for wealth. There are a couple of statistics that are telling us that Kenyans are ready, are awake to our proverb around question around wealth. And this is driven by what we call life goals. What is really important to a Kenyan. They want to educate their children. And they are saying that they want to educate their children. It's now very common that in every family or every two families, there will be someone, or there is an aspiration for someone to go to college. So that's important. They are conscious about their health. And of course, during COVID, we saw quite a bit of these elevated concerns around, family health. And they want to put money aside for family health emergencies. They are keen about retirement. I think now we are seeing more and more people who have been working are coming to retirement. So retirement is now a common thing. Not that people fear retirement. Now people are embracing retirement, and of course they want to put some money aside for that. And finally, but not least, the issue of legacy. people want to ensure that the family wealth moves to the next generation. So it's become very important. So the conversation now is a kitchen table conversation. It's mainstream, and Standard Chartered is clearly wanting to be part of the in the forefront in investing in the area of wealth and helping our clients do that. Globally, we're investing a lot of money. We're investing in training of our relationship managers, investment advisors. We invest in infrastructure. We're investing in products. So there's a whole lot of dollars and shillings backing this very, very ambitious statement that now is the time for wealth. Yeah.
So we talk about time for wealth is now, and with the wealth that we have now, it is a question of D&D. In this room we have D&D, Dennis, Ndu, and Dennis. And with that, this family that we have a business that is doing very well, and it's a question of cascading these to the next generation and ensuring that this business, this SME product that we have is doing very well, and that the future is able to take care of it. So why is, one would say, Standard Chartered Bank takes this as an integral part of business in ensuring that this wealth is protected, is shunned, and even gets to grow beyond D&D? Why is that the case?
Yeah. So if you recall businesses previously, and these are businesses that began in 60s, 70s, 80s, 90s, and some in 2000s. There were very few products available to family-run businesses or SMEs. And when you go to a bank, there were mainly three products that you'll get. Is either a current account, a loan, and if you have extra cash, then it will be a fixed deposit account. So we didn't have solutions for wealth during that particular time. And when you look in the country, statistics show us that 70% of SMEs specifically are family owned. And with this, then how do we help these families to be able to transition from the traditional products into the emerging product that we have in the market, and this is wealth management. So what we have done as a business then, we have created solutions that comes in to support these clients to be able to look at something different from what they have looked at. And this will cover both cash flows, in case the client is in need of cash flows. It will cover legacy planning, and also in case the client is looking at expansion, then it will cover for that. And we have three continuums that we look at. So we look at today, tomorrow, and forever. And in the today is the cash flows, because for a business to be able to run efficiently, you require cash flows. It's just like a human being, you require blood for you to be able to function. The same applies to the business. Cash flow is the bloodline for the business. Then, and that addresses the today. Then when we're looking at the tomorrow, is this business looking at expansion, is looking at other opportunities that it can be able to take advantage of. So it's not going to take advantage of those opportunities now, but it's going to take advantage of those opportunities into the future. And that then addresses the tomorrow part, and we have solutions that then covers that. Then we look at the forever part is, as the owners of the business, you want, as you exit the stage, then there's new generation that comes in to be able to take over that business, and that comes into legacy planning. So as then Standard Chartered, we have created solutions that are able to help the SMEs to be able to take care of the today, of the tomorrow, and of the forever.
I have a quick question. Maybe perhaps walk us through to just understand how Standard Chartered is structured to support these family-owned businesses.
Thank you for that good question. So as a bank, we have invested a lot in the human capital and also in the systems. And the human capital talks of the relationship managers, the investment advisors, and the partners. So what have we done as a bank to ensure then these resources that we are putting in front of the SMEs, they are giving the right solutions to the SMEs and are addressing the goals that the SME need to achieve. We have very good programs, certifications that we certify this staff or the human capital that we have, and they go through a continuous review and a continuous certification so that they are well updated on what's happening in the market. In addition to that, we have Chief Investment Office that gives then the market outlook both for the local and also international. So like today, we have challenges globally in the Middle East, and there are opportunities that are coming up that SMEs can be able to take advantage of. And then the Chief Investment Office, through their market outlook, they are able to support our clients to be able to take advantages of those opportunities that come into the market. So together with that also, we have partners who are outside the bank because the bank can't be able to solution everything. So we bring on board other partners that are able to help our SMEs to be able to address some of the challenges they have facing within the business and also to achieve their goals. Thanks.
So what would, I mean, I'm still sticking on this now, family-owned businesses and that enterprise. What would then a family-owned business then be able to benefit? What would it be that we would then be able to engage in that then solidifies that position? And you say, okay, fine, this is how I've actually been, these are the steps that I walk through, these are the things that I've been asked to do. Whether you have a portfolio of, servicing 100 clients, are we talking about moving to the next 100? Are we talking about making sure that there's a longevity of the business? How exactly does that in reality turn out to be? Okay.
Yeah, allow me to use an example of one of our client. I won't name the name, but I think this has for me been the point where I realized what we are doing as a bank really make a lot of sense, and it's benefiting families. So I have a client who is in the travel industry, and I know during COVID their business essentially got shut because clients were not traveling from abroad, and they were quite in the high end area of the travel business.
Yeah,
the good thing is that earlier on we had a conversation about what do you do for today, tomorrow, and forever.
Yes.
And on the piece of tomorrow, we had built, a portfolio of government bonds that were giving a certain level of cash flows into the business, and this is how they were investing their spare cash. So you can imagine, like the Bible says, the 7 years of bounty and the 7 years, right?
Yeah.
So during the good times, they kept putting the extra profits that were making the organization into building an alternative source of cash flows. So then COVID happened, and nobody really anticipated COVID, and nothing could happen. But this client kept their staff paid. They kept their office operating, and they spent a lot of time doing research in terms of how do they reorganize their business going forward. But then what happened to their counterparts in that industry? They actually got shut completely, and they did not manage to survive through the crisis. So when the travel bans were lifted and the travel started happening, they were actually able to gain a lot of business from their competitors. They managed to build a complete new business into the East, into Japan and to the Asian markets, because predominantly they were in a European and an American kind of a travel company. They managed to build a complete new segment when they travel. And when I was speaking to this client, it dawned on me that actually what we actually do is not just about helping the business just invest. It's actually we're giving them a survival lifeline, that they can actually take and use, when the time are not as good. But then even going further into some of the conversation that Bernard has brought, in terms of what happens when the founder, the owner, the chairman, the president of this SME is not able to do the day-to-day business, and it has to go to the next generation. How have you prepared this organization from a governance perspective? Are the records clear? Is the banking clear? Is the relevant documentation that we ask the SMEs to file with us? Sometimes it can be a little bit painful, but when they put this document, the CR12s and all that, their ownership structure, do they have a shareholder agreement? What is there? It really helps this business when it's transitioning, and the people who are taking over can actually know this organization that now we have starting to run. Who are the suppliers? Who are the customers? How does it bank? Are our records with the relevant regulators in the right space, right? And therefore the business can be able to move, because it's get professionalized when they actually bank with us. So there's a whole lot of things that we do, both specific to an investment perspective, but also this governance question that we help our clients to think through, think ahead of time, and then obviously so that we prepare them to the next generation.
So, Paul, you mentioned, Bernard had mentioned in terms of today, tomorrow, and forever, which is integral, as well as just pairing an SME with a proper back-end stuff that helps you, shows you how to generate this wealth, how to maintain it, and even take it to the future. But then again, after getting to that point where now people are exiting, there is retired. Others just want to enjoy life. I'm retiring, giving out to my children to now continue with the legacy. And there is the aspect of what kind of solutions are there for me? It's the big question, because then again, I don't know how to start, where to go to. So in terms of I've been held, I've been shown the way, my business is doing well, I'm now just going to enjoy life in the Bahamas, but I need solutions to make this business leap forward and even become great. So what solutions are we looking at?
Okay, thank you. Thank you for mentioning Bahamas. I've actually been there.
Nice, isn't it?
Very nice place, yeah. Yeah, but let's get in now into the details of the solution. So the first one is obviously the foreign exchange, which we help the clients navigate across the globe. We know their businesses are complex, and some of these solutions could be as easy as do you have to pay in dollars while your imports are coming from China or they're coming from India? And we can help the client think through that and really lower their cost of doing their imports or exports, right? And even managing their foreign exchange between what comes in and what goes out, what is the right time to buy, and those kind of things. So as simple as that. Then we get into the business itself. Business is post. There are risks that business is post. It could be fire, it could be burglary, it could be all manner of things, right? And therefore we wrap the business into an insurance so that in case something happens, then you can be able to move in for the next day. We've thought about the today, which is around the cash flows. Sometimes when you have profits in the businesses, what we are saying is that really invest these profits and build us another passive line of income that is coming to the business, because that will help the business during the other cycle where the cash flow is not as strong, right? When we now start thinking into the future and we look at is your business exposed only to one form of currency, and is your income all in one currency? And I remember at some point back I wrote an article around that in the Business Daily. So how are we helping our business to think of multiple sources of income and in multiple currencies? Because then you also manage your foreign exchange risk as well, and you also manage some of the inflation risk that may come around. And then finally, as we get into the final stages of the business cycle in terms of the management, is the transition. And here is where we think about the key man risk. Who are the key men who are running this business, and the risks that themselves they are exposed to, and how can they manage that risk? So we have a product called Live Life, which we partnered with Prudential, that owners of business can actually get in, so that it pays off into the businesses and allow the business to continue when these people have exit. And also there's also very interesting solution that we offer across our overall Standard Chartered franchise in our hubs. We have a hub in UAE, we have one in Jersey, we have Singapore and Hong Kong. And these are legacy planning tools. If you had time, I could take you through some of these tools, but really they are very interesting, because if you're a business owner and you have two children, one is in the business and the other one became a doctor or a musician or something that is not related to the business, and this business is worth $5 million and you want to bequeath it, if you cut it two and a half, the kid who is in the business will say, sorry, I'm the one who is running the business. You've given half to the other guy who decided to go off in UK and do completely something different, right? But if you don't give half, the other one in UK who is a doctor or musician will say, sorry, am I less a child? But using an insurance solution, you can buy a policy worth $5 million. The policy you issue to the guy in UK, a doctor, the business $5 million, you give it to your son or daughter who is running it on a day-to-day basis. Everybody is happy, right? So we have these solutions and we can craft it. We can craft it specific to our business so that it becomes much easier to move the business to the next generation without cutting it without splitting it. Because when you split it, you will actually destroy the value of that business.
I think there is some value in looking at some of those legacy tools, because it's the real stuff of what it is that we are talking about today. So maybe we take a break and we can come back and look at one or two, and you can share so we can, kind of broaden, the expanse of our horizon. But before we do take that break, Paul, you mentioned also that, widen the scope. So you're operating in different jurisdictions, also operating in different currencies. What exactly does that mean? If you make some money, you store it in a different currency, or are we saying start to trade in different currencies? Or how do you then advise folks to then get along those lines?
Yeah, so and it's both.
Okay.
Because businesses are in different cycles. There's a business that is in the startup cycle, and in that case, what they are looking really is to really ramp up and expand. And usually, what you find that business is, it doesn't have a lot of cash flow. All cash flow is getting invested. There's a business in the growth phase, and in this case, then they are making profit. And what we start advising business at that level is start putting your profit into another investment category, and that could be bonds, could be mutual funds, right? Ensure that you have the right covers, so that in case the cycle changes, because cycles do change, then you are able to really face that cycle and keep your business growing. And then you have business in the consolidation space, business that are actually transitioning, and what they are looking is to preserve the value of the business, right? They're not looking to expand into new lines, to build a new manufacturing line, or to open new branches, but what they want is to actually to ensure that they consolidate what they already have. And this is where the store of value is really important. And we are looking at different currencies to say, ensure that you have assets in different currencies, in different jurisdictions, in different asset categories, so that in case something is happening in one area, you can always buffer it from the other side. And that's the power of diversification. So even businesses can diversify. I want to make one last point, is that remember, as in Standard Chartered, we are serving the business itself as an enterprise, and we are serving the business owner as an individual as well. And those solutions that we have are looking at how can we actually have solutions that cut across. So whether you want to approach us as an entrepreneur, the individual, or the business, we're able to cater for your needs.
So, Bernard, we can sit here and talk about family businesses, and we can talk about those fancy numbers, that Paul mentioned about, $5 million and above. It sounds wonderful, isn't it? But it's not easy to get there, is it? And that there will be challenges that you'll face along the way, and taking those challenges into consideration then probably is also a step towards success. So what are some of those challenges that family-owned businesses actually do face when it comes to wealth and the creation management of it?
Thanks, Ndu, for that good question. So challenges for family-owned business, they are varied. So it depends with the business you are in. Some of the challenges can either be accessing of credit. Other challenges is how to transfer that business to the next generation, and Paul has spoken about it. And others just getting the market. But the most common challenge that most of these businesses face is transfer of that family business to the next generation. And what we have seen when we look at the statistics is globally, 42%, an average of 42% of family-owned businesses, they have succession planning. When you roll down to Africa, is only 33%, an average of 33%, which falls short of the global average. When we drill down to Kenya, is about 50% have thought about succession planning, but most of them have not been able to put it into practice. And 2/3 of that, they have thought of transferring that business to the next generation, or they have involved the next generation into the running of the business. So when then you expand it and look at both the businesses owned by locals who are Kenyans and others who have come to invest in, the challenge then comes on the next generation. So what we have seen, most of the business owners, their children don't study in country. They either taken to Australia, they either taken to United Kingdom or US to study. And these children, some of them don't want to come back to run the businesses. So then it becomes a challenge to the owner of the business. How do you then transition? So we have solutions, and Paul has spoken about it, so insurance solutions that then is able to help the business owner to be able to transition that business to the next generation, where you have more than one child, and one of them at least is interested in running the business. Also, we have other solutions whereby we invite partners who are willing to be able to buy you out, and these are PE fund, the private equity fund, that are willing to come in and be able to take over your business. We have seen quite a number of businesses in Kenya doing that transition, especially where the children don't want to get involved in the business, and the owners now have become of age; they cannot continue running the business. It has really supported that, and in situations whereby then the children, one or two of the children is willing to run the business, then that is handed over, and the insurance, Paul spoke about the life insurance, then comes in to be able to take care of that child that is not interested in running of the business. So that's the more common challenge for most businesses. The other challenge is on the cash flow side. Now, the cash flow side also depends with the business. It can be either cash flow on the collection side, you are not collecting as expected, so you're getting delays in payment, or there are one or two delays here. And what the bank then, Standard Chartered, has done, has put in very good solutions that then help that business to be able to address the challenge when it comes to cash flow. So we have very good trade solutions for businesses, and also the working capital solutions that then help the business to be able to address the immediate need for cash flows. When it comes to expansion, and as you know, most of the businesses in Kenya, family-owned businesses that are 10, 20, 30 years old, they have in one way or another expanded into other markets, either in Uganda or Tanzania, and they require capital to be able to do that. Then the bank comes in to be able to support these businesses by giving them the necessary capital required to be able to expand. Now, we don't stop there. As much as then we'll be providing funding for these businesses, it's upon us as an institution to also provide advisory to this client. Why is that important? Is we have seen it in other markets that we have presence in. We have over 100 years experience in some of the jurisdictions that we serve, and some lessons that we have seen in the bank that we're able to transfer the same to the client, so that it doesn't make the same mistakes other businesses have made and have gone under. So outside just providing financial advisory or financial solution, then we support the client by providing them the advisory required for them to be able to grow their business.
Paul, I just want you to briefly just stop up on that, because now there is the aspect of the challenges that do exist, and Standard Chartered comes in with over 100 years of experience, and also the fact that we have tailor-made stuff that hold one's hands moving forward. So how just critical and important is that in these legacy business, in just making sure that someone does not make the mistakes because you've seen it before?
Okay. Yeah, and just before I just want to add one more statistic to what Kombo has been mentioning. There's what is called the third generation curse, and what that means is, and it's statistic and it's studied as history, that wealth does not 90% of the wealth gets lost by the time you get to the third generation. That's a significant number. 90% by the third generation, and actually 70% in the second generation. And also another statistic is that globally, about $100 trillion of wealth will transfer in the next 2 decades. 100 trillion.
Will transfer to the next generation. Oh, okay.
Yeah. And Kombo mentioned that 70% of all SMEs who hold majority of the wealth are actually family-owned business. So what am I coming to? Is that if we don't address the issue of succession planning in family-owned businesses, this 100 trillion, which 70% of that is 70 trillion, will actually dissipate by the time you get to the third generation. And this question is not about just the ability to make money, because these business owners are actually really, really smart people. That's why they've made this wealth. They have managed to overcome a lot of challenges on the street on a day-to-day basis. They understand, right? And some of the other risks that are seen, which is global in nature, and we are seeing the tariffs, the taxes, the interest rates, the inflation, those numbers get published every day, and therefore they are able to see that, right? And then respond. But there are risks that business owners are not seeing, and it only comes out once the founder, owner, chairman, president exit the scene, okay? And this is within the family. There are the succession battles, there are family feuds, there are, all the things that you've read in the newspaper, you've heard in the news, and a lot of it which we see in the banking space, which is not said, because when somebody is not there or not, they are not able to run the business on a daily basis, we see the battle coming into our space saying, hey, I want to take over the account, like, okay, bring the documents, where are they, right? And that we see is what is really destroying value, okay? And when we say now is the time for wealth, for family-owned businesses, now is the time to create the right succession plan for your wealth, so that wealth can transcend beyond the third generation. Okay, so that is there, and we really are calling on our people who are running our economy, who are the SMEs, right, and in so doing family-owned businesses, to come speak to us. We got something we know. We got some expertise. We have people who are trained, and we got the right partners, solutions to really help them go through into the next phase of their businesses.
Bernard, because Paul is talking about this third generation cars, and 90% is lost by the time you get to the third generation. At the back of all this is obviously the transition conversation. So as businesses transition then from the first to the second or the third generation, the founders are the ones who worry the most about control, continuity, and that sort of thing. So what financial tools or advisory services, because you earlier spoke about you provide advisory, what tools or advisory services does then a Standard Chartered offer to ease the transition while preserving wealth at the same time?
Okay, thanks for that for the question. So the tools that we have in the transition, they are both on the insurance side, whereby then the insurance solutions then will give you, that will help you to be able to transition this business without a lot of animosity, so that each of your children or each of the next generation, they are able to focus on what they like most. So that's one. Two, on the advisory services, so we don't work alone. We work with other partners. We have legal firms, we have financial advisory firms that are able to sit down with the owner and help them to be able to package based on the goals that the owner want to achieve. Yes. So as you mentioned, sometimes a business, possibly you began as a trading business, then you transitioned into manufacturing, and now you want to do something bigger than what you are doing, and that's the vision you have as the owner of the business, and you want that vision to continue. So it's upon then for you to be able to communicate that goal that you want to achieve. Then the financial advisors and the legal advisors, they're able to sit together with yourself and the next generation and to be able to give you the support, the support that you require. As also the bank works on giving you those insurance solutions and other financial solutions that are able to take care of those children that have no interest in running of the business. Yeah.
So, I mean, if I can segue from that, and that, those last few words form the first few words of the question that I had. So then, Paul, when you talk about that, making that transition, so we can be real, right? And we say it's possible that you do have this business, this family-owned business, a mother, father could be the thing. They're making very good profits. They've been in operation. But then in our world today, as is the case with maybe their children who are of that age, 24, 25, 26, who want to experience the world. They want to do their own thing. But there is this business that is making very good profits from a banking perspective, and also beyond, like the relational perspective that we see Standard Chartered has. You can see that this business will do fantastic things in the years to come. But the connector to the future is these children who are unplugged, who don't, there's nothing you're going to do to convince them otherwise. How do you sustain that then? Because a family-owned business means that family. But if there are members of the family who are not interested, and the day and the sunset day years are coming for the parents, how then do you tangibly, really make that connection for this business to continue?
Yeah, and the question is exactly what we ask the founder, the chairman, the president, the person who is running the business, and we start asking those questions as early as now, even if the founder is not looking to transition this business 20 years to come, because maybe they still have a lot of energy with them, right? But the fact that we start asking these questions and bringing this expertise for the family business owner to be exposed to, brings that consciousness, and therefore then they start telling us, this is what I will intend to happen into the next 10 years, in the next 20 years, right? And then from there we start then having a conversation around, okay, first of all, is the business protected? Okay, good, done, right? Your profits, are you investing these profits into passive income? Those are in the bond market, and it can be in shillings, can be in dollars, can be in pounds, can be in euros, can be in Aussie dollars, can be in different currencies, right? And that is a diversification question, because, the business is in Kenya. If your currency is only in Kenya, then really anything that happened to Kenya puts your business and you at risk at the same time, right? So we ask then, are you building another source of passive income? Okay, the bank supports that. We have a wide range of investment solutions, as I mentioned, in the bond market, in the equity markets, across. Then we go into the third one, which is the forever question, is the transition, and we ask these questions. In fact, any business owner I've had a conversation with, and I know with my team as well, we always ask this question. So what's next? Yeah. Sometimes they'll start the answer in terms of the way they want to expand into other market, and we keep asking, but what about internally? Who is taking over? And we do encourage businesses as they grow to start professionalizing their business. Bring a CFO, a professional, qualified accountant, that kind of thing, right? Bring a technology person who is a qualified, bring like that. And then you sit in the board as the chairman, but let the day-to-day operations start getting devolved into the professionals. But obviously, form the family constitution, form the shareholders agreement, form the right documentation, so that you can still have the veto power to say, sorry, I will not approve a purchase of a new plant. I will approve an expansion of a branch into this area. Okay, but the day-to-day, the suppliers, the buyers, all that, dealing with the day-to-day business, you let the professionals start running, and then you look into your family. And sometimes the successor may not be necessarily your own child. Could be, somebody in the family, but not necessarily your child. And I know the Asian community does this absolutely well, right? And there's something for all of us to learn from them. So see who it is you're identifying. And even as they go to the school that you are taking, the course they are taking, if they're interested in accounting, then let them do that accounting with a purpose into the future that they will become the CFO of the company. You get, right? If they're interested in marketing, let them go to learn marketing, but ultimately with the interest of them to come and work for the company. And bring them to our events. We do a lot of client events, round tables. Bring them so that they can listen to us. We can help them start thinking and triggering their thoughts around, actually there is value in what my dad, my mom is doing. And even if I go to UK, Australia, I think I'm interested to come back and run this thing. And we've seen some businesses that have transitioned from one generation, there were just a small few branches. Once the new generation comes in, they actually really expand this business to the next level. And that's how you've seen, the Kentucky Fried Chicken, KFC grew, you've seen the Mercedes, you've seen the Tatas in India. They've grown through family transition over time to time, right? So that's what we are really encouraging, because we believe that in Kenya, we got really, really strong businessmen and women, and they are building a lot of value. But we're just asking now, let's discuss this so that the value that doesn't get destroyed when the transition is happening. We want to be the partner, Standard Chartered want to be the partner to help the business transition. So let's not just think about growth and expansion. Let's also, in the same conversation, think about transfer succession. because that's where we are seeing most of the value getting destroyed. Yeah.
And you talk about transfer succession, which is equally very important. And one would just want to ask, in the number of years that you've been into the business, how has been the response in the businesses that you've handled thus far?
Absolutely. And Bernard is here. He's seen what we've done in the business unit. I mean, before COVID, we were barely doing a lot. I mean, pretty much small, right? But I think there was a real wake-up call. And I mean, without quoting numbers, we generated quite a lot of interest and actual, business coming from the SME. Overall, and I'm careful not to mention numbers that we're in a close period, but overall, we have a portfolio of about $2 billion. Yeah, and this is individuals and family-owned businesses and SMEs, right? And as I mentioned, we serve the individual and the business, right? So you can imagine most of the people who are also coming through the individual line are also actually owners of businesses, and that's not small. Yeah,
it
not small.
Bernard, what industries or sectors are you seeing? Because things were different in terms of the clients that you're attracting pre-COVID, post-COVID. The needs keep changing. What are you seeing as the trends currently in terms of the industries or the sectors that has most activity from family-owned businesses, and how is Standard Chartered then tailoring support based on these different sectors?
Okay, the biggest sectors that are growing, despite a few challenges in the economy here and there, is the trading business, the consumables. So any client who is in the trading business, manufacturing consumables, they're expanding and they're doing quite well. We have also seen growth in the export business. The floriculture business is doing quite well. The coffee industry is doing quite well. And when you look at the statistics that were released by Central Bank of Kenya, it shows that the country is actually edging up on the export. And those export industries that we have, they're quite doing well. Then come to tourism. So during COVID period, collapses. So locals then are encouraged to consume the products we have in the local market. Then it booms. And I believe you have seen whenever there's a holiday, going to Mombasa, the train going to Mombasa is always full. The hotels in Mombasa are always full. And these are locals consuming that. But despite that, after COVID, we have seen a lot of interest from foreigners coming to visit the country. And when you look at the travel industry, the number of charter flights coming into the country, the number of visitors coming into the country is growing quite fast. And that also contributes the growth of hotel industry in the country. Lastly is the construction industry. You've seen a lot of activities taking place, and these are funded mostly by private enterprises, not necessarily the government, private enterprises. We have seen mushrooming of flats, both within the CBD and outside, within Nairobi and in the satellite towns. And what the industry, what companies then are taking advantage of is the tax breaks that the government gives when you are investing outside Nairobi, when investing into the rural areas. And that has given a big spur to the growth of manufacturing entities outside Nairobi. Because if we recall, manufacturing was mainly stationed in Nairobi and partly Thika. Then that has really transitioned. When you look at Machakos, is booming in terms of manufacturing. Look at Kisumu, is also growing, and Mombasa is also growing in terms of manufacturing. So those are the main sectors that we're seeing growth. And there are others that, yes, they face challenges during COVID period, and for some time they have faced challenges, but now they are coming up. The biggest challenge has been the collection, and you've seen what the government is doing to ensure then the suppliers also supplying to the government. They are getting paid. That's a very big boost to the economy, because what I always say is, when you pay a supplier, then he has to buy raw materials from another manufacturer or another supplier, and that keeps on the cycle keeps on growing. So the biggest growth is in the retail trade and wholesale, and tourism.
There you
the
go.
one plus the export business. They're the ones showing biggest growth in the economy.
Okay, let me as we round down this conversation, Paul, remind us how then, the folks who are sitting and Bernard has just mentioned their industry and they've seen that over the last 3 years, they've actually been able to do something. How then do we get in touch? What do we do?
Yeah, thank you. So you write to us, wealth.kenya@sc.com, wealth.kenya@sc.com. We will be willing and ready to come and have a conversation with you. We'll come to your offices if that's easier, or you come to us, whichever works. And really the first point is we want to understand what are your goals? What do you intend to do in the next 3, 4, 5, 10 years, 20 years? And more importantly, we want to come and ask you this question. What are your legacy? What are your wealth transfer goals? We want to ask that question. And whether you're ready now or not, we will support you along the way so that we can make sure that this wealth that you've worked so hard for in your family-owned business does not dissipate away by the time it gets to the next third generation.
Wealth@sc.com. Right there. Paul Njoki is the head of affluent banking and wealth management, Kenya, East Africa, and Bernard Kombo, the head of SME banking, Kenya, Standard Chartered. Thank you so much for being here. Always something to learn and stuff to look forward to. Asante sana.
This is the Situation Room, the only way to start your day.